Attention seniors. This is an urgent federal tax update for the 2026 filing season that could save you thousands of dollars this month. You may have heard rumors about no tax on Social Security during the last election cycle, but today we have the official confirmation. The One Big Beautiful Bill Act has introduced a massive new tax break specifically for those aged 65 and older. It is a brand new $6 senior deduction that is effective right now for the taxes you are filing this February. Let's be very clear. This is not just the standard extra deduction you've received in the past. This is a completely separate, additional $6 per person boost. If you are a single filer over 65, your deduction just jumped significantly. But for married couples where both spouses are 65 or older, we are looking at a combined $12 deduction on top of your standard deduction. This is a game changer because for millions of Americans, this new math effectively removes your Social Security benefits from federal taxation entirely. But there is a catch you must be aware of: the $75 phase-out. This new deduction is designed for middle and lower income seniors. If your modified adjusted gross income is below $75 as a single filer or below $150 as a married couple filing jointly, you qualify for the full amount. However, if you earn just $1 over these limits, the IRS begins to phase out the deduction by 6 cents for every dollar over the threshold. The most important thing to know today is that this deduction is temporary. It is scheduled to expire after the 2028 tax year unless Congress acts again. That means you need to claim every penny of it while it's available. Many tax software programs and even some local preparers are still catching up with the complex OBBBA rules from late last year. If you don't specifically look for this senior deduction on your 1040SR form, you could be leaving a massive refund on the table. In this video, we are going to break down exactly how to find this deduction, the income limits you need to watch, and how to combine it with the existing 2026 standard deduction to reach zero tax status. Don't let the government keep your hard-earned money. Stick with us as we dive into Step 1, the new standard deduction math for 2026. To truly understand the power of this new update, you have to look at what we call the 2026 tax stacking strategy. For years, seniors have relied on the standard deduction, which for 2026 has already been adjusted for inflation. But the One Big Beautiful Bill Act adds a whole new layer. When you combine the existing 2026 standard deduction, which is approximately $15,000 for individuals, with this new $6,000 senior deduction, you are effectively shielding $21,000 of income from federal taxes as a single person. For a married couple, the math is even more impressive. If you are both over 65, you combine your joint standard deduction of roughly $30 with the double senior deduction of $12. That is a massive $42 tax-free shield. Why is this critical? Because for many of you, your Social Security benefits make up the bulk of your income. If your total income, including half of your Social Security, falls under that $42 threshold, you could officially be in the zero tax bracket for the first time in years. However, you must be careful with the Form 1040SR trap. The IRS created this specific form for seniors to make things easier. But if you or your tax preparer simply check the standard boxes without specifically citing the OBBBA Section 70103 credits, you might only receive the basic deduction. In 2026, the IRS computers are programmed to look for these specific election codes. If they aren't there, the system defaults to the lower, older deduction amount, and you lose out on that extra $6 or $12. Another massive benefit of this stacking strategy is how it impacts your Medicare Part B premiums. Since this deduction lowers your adjusted gross income, it can actually keep you below the thresholds for IRMA. By claiming this $6 deduction now, you aren't just saving on taxes this April, You are potentially lowering your Medicare costs for the next year. It's a double win that most seniors are completely overlooking. In the next section, we're going to look at the taxable Social Security formula and how this deduction can finally stop the government from double-dipping into your benefits. For decades, one of the most frustrating rules in the U.S. tax code has been the double tax on Social Security. You paid into the system with taxed income throughout your working life, only to find that up to 85% of your benefits could be taxed again once you retired. However, for the 2026 tax season, the One Big Beautiful Bill Act has created a powerful shield against this practice. By adding the new $6,000 senior deduction on top of your standard deduction, the federal government has effectively raised the tax-free floor for millions of beneficiaries. Here is how the math works in your favor. In 2026, a single senior can now have a total deduction of approximately $23,750. If your only income is Social Security, you likely already owe zero. But for those of you with a small pension, an IRA withdrawal, or a part-time job, that extra income used to trigger taxes on your Social Security checks. Now, with this $6,000 boost, that extra income is absorbed by the deduction first. This means your Social Security benefits remain untouched and untaxed in many more scenarios than ever before. For decades, one of the most frustrating rules in the U.S. tax code has been what many call the double tax on Social Security. You paid into the system with taxed income during your working years, only to find that up to 85% of your benefits could be taxed again once you retired. However, for this 2026 tax season, the One Big Beautiful Bill Act has provided the strongest shield we have ever seen against this practice. By adding the new $6,000 senior deduction on top of your standard deduction, the federal government has effectively raised the tax-free floor to a level that covers the vast majority of average Social Security recipients. Let's look at the math that the IRS doesn't always make obvious. In 2026, the average Social Security benefit is approximately $2.70 per month. If that is your only source of income, you already owe zero. But the moment you have provisional income, like a small pension, an IRA withdrawal, or even a part-time job, the old rules would start taxing your Social Security checks. With this new $6,000 individual deduction, that extra income is absorbed first. This means your Social Security benefits remain untouched and untaxed in thousands of scenarios where you would have owed money just last year. Now, I've seen many questions in the comments asking, what if I'm on SSDI or SSI but I haven't reached age 65 yet? Do I get this $6,000 deduction? This is a critical distinction in the One Big Beautiful Bill Act. Officially, the $6,000 senior deduction is age-based, meaning you must turn 65 by December 31st of the tax year. However, for 2026, there is a secondary provision under the Disability Tax Fairness section of the bill that you need to know about. If you are receiving SSDI and are under 65, you may not qualify for the senior version, but the 2026 law has expanded the disabled tax credit to mirror some of these benefits. While it's not a straight $6,000 deduction, the credit amount has been increased to offset the 2.8% COLA bump we saw in January. The goal of Congress in 2026 was to ensure that your cost of living adjustment wasn't immediately eaten up by federal taxes. If you are on SSDI, you must check Schedule R on your tax return. In 2026, the income thresholds for this credit have been raised for the first time in a decade, allowing more people with disabilities to keep more of their checks. For our SSI recipients, remember that SSI is already non-taxable. You don't pay federal income tax on SSI payments. However, the $6,000 deduction is still vital for you if you have other income. If you are over 65 and receiving a combination of SSI and a small part-time wage, this deduction ensures that your wages don't trigger a tax bill that complicates your SSI eligibility. In 2026, the IRS and the SSA are sharing data faster than ever before. Using this deduction to keep your adjusted gross income low is a strategic move to protect your benefits from being reduced due to excess income reporting. The bottom line is that 2026 is the year of lowering the AGI. Whether you are using the senior deduction at 65 or the expanded disability credits at age 40, the objective is the same: stay under the government's tax radar. In our final section, we are going to give you the March 2026 claiming checklist to make sure your tax preparer doesn't miss these new OBBBA codes. We have covered the math, the stacking strategy, and how this $6,000 deduction protects your Social Security. Now we must discuss the execution. In 2026, the IRS is not sending out separate checks for this deduction. It is a below-the-line adjustment that must be correctly identified on your 2025 tax return, which you are filing right now. If you miss it, you are essentially making a voluntary donation to the federal government. Here is your 2026 OBBBA checklist. First, verify your age. If you turned 65 on or before December 31st, 2025, you are 100% eligible. Second, look at your modified adjusted gross income. If you are a single filer earning under $75,000 or a married couple filing jointly under $150,000, you are entitled to the full amount. Third, and most importantly, ensure your tax software or CPA is using the new Schedule 1A. This is the specific 2026 form where the enhanced senior deduction is calculated. We have seen reports of some older software versions failing to update these OBBBA codes. Don't let a technical glitch cost you $6,000. Remember, this is a temporary provision. Under the current law, this bonus deduction is set to expire after the 2028 tax year. We are in a unique 4-year window of massive tax relief for seniors. By taking advantage of this now, you are not only putting an average of $670 to $640 back in your pocket this year, but you are also setting a lower income baseline for your future Medicare premiums. This is the reality of the One Big Beautiful Bill Act. It rewards the proactive and punishes the uninformed. Don't be part of the group that finds out about this in June when it's too late to easily amend your return. Take control of your financial destiny today. If this deep dive helped you understand your rights as a senior taxpayer in 2026, do me a favor. Hit the like button and share this with one friend who is over 65. They will thank you for the extra thousands in their refund. This is Gene, your guide to every federal benefit and tax alert in 2026. Stay informed, stay prepared, and I'll see you in the next update.